This is Eric Muad for the week of August 12, 2013. We are looking at markets called slightly down with about 1 hour and a half before the market open. Let's take a look at the weekly charts to see what we have in store for us. We see that the Nasdaq Weekly still remains very strong, way above its breakout level of 34.98. So it has a long ways to come back and test this breakout. We have 10-week moving average, which might offer support down the road. So Nasdaq looks strong as far as the trend is concerned. Let's take a look at the Nasdaq Daily here. And you see that still the market has found it difficult to move above the top lines of that channel. And we'll see whether we are going to try and recapture that top side of the channel, or we're going to still continue creeping to the downside. We'll see what was going to happen. But I was taking a look at the MACDs on a daily chart, and it looks like on the Nasdaq, the MACDs point to the probability on a day-to-day basis for this market to clip here, move below these levels here, and also move below zero here on the MACD, which might put pressure, especially since the market is starting the week with a down action. We'll see what happens, but the daily shows some type of negative setup. The Dow weekly chart shows that the Dow is now going to have to contend with this breakout level of 15,354.40, which is the weekly closing high going back to late about April, May, and since we've not been able to come back to this level, the market does have to defend that. Otherwise, if it can defend that and move higher, that's good. That's a good retest of the breakout. If it fails and fails to hold the 10-week moving average, then we start looking at a market that is probably starting to lose more of the strength it had. We have negative divergence here on the weekly RSI. That's not a good sign either. The Dow transports on a weekly chart, you see that, and we've talked about this. We have now a break or a failure of this breakout attempt here. We have two failures. Now we are testing the 10-week moving average. If we can't hold, that's not good. Also, don't forget that we made higher highs here in price, and yet the technicals made negative divergence, which is never a good setup. The S&P 500 weekly shows that the level to watch on a weekly basis is 1667.47, this weekly closing high here. The market does need to hold that if it's going to move higher. This area also happens to be where we have a 10-week moving average. So we'll see whether we are going to hold or we're going to fail. We also have to note that we have this making new all-time highs above 1700, but yet the technicals did not follow through. So we have a small negative divergence, which, like I said, is not the best setup for any market. The S&P 500 for a daily chart, I think the level that the market has been holding is this 1687.18, which is the highest intraday level in May 22nd. Market's been holding firm there. So for one, let's see whether the market can hold above that previous intraday high of 1687. If it cannot, the next retest is going to be the previous highest daily close of 1669.16. So that's the next level. It needs to hold that. If it holds, that's fine. If it doesn't, then we'll see whether it's going to again have to test support at the 50-day moving average. So those are the levels we can watch. As far as the hourly chart for the S&P 500 was concerned, all this recent pullback, make sure I get the right one here. All this recent pullback stems from the fact that we were making higher highs in price, and yet the technical picture kept making lower lows. And that was a bearish setup. So we'll see what happens short term. Enjoy the good week. Don't forget this is options expiration, and usually volatility does spike. Eric Moore, the good luck, peace, and blessings.